Hello, everybody. It's Bob Anderson, and I want to do a detailed, deep discussion on the open range break. For those of you that are not familiar with that term, that is a creation of a box. Got to visualize that this is a trading chart. Okay, I put these tape up here for the extension beyond like the time that the box is formed, so that I can draw on it and wipe it off for this video. But anyway, so this is a box that creates that's for price action for 15 minutes. I'll be showing some examples at the end of this video. Anyways, what it is it's 15 minutes. So let's take gold. Gold, the market opens at 8:20, and 15 minutes later, the 8:36 moment, boom, the box is created. Now, what this trading strategy is based off of is price action from that box, the creation of that box. What we're predominantly looking for is breaks out of that consolidation zone of the first 15 minutes. That's predominantly what we're looking for. There's four trades that I have identified as being consistent ones that are codable and followable, whatever that means, and that you can that you can probably sit at home and work on some of this yourself. Anyway, so the four trades are the immediate break, the mid-band, the second attempt, the crossover / late break. Okay, and I'm going to talk about each one of those in detail right now. But what I need you to understand first is, like, so if this was oil, this would be the 9 o'clock begin and the 9:16. 9:16 is when the 9:15 candle's done. 9:16, that's when the 15 minutes are over. So that box is created, and what these lines are is this is the top of the box. These extend out now. Once the box closes, these extend out. I've got an indicator for it. I'll try to link the thing to it in this video. But anyways, that'll create this box and these bands for you. But anyways, there's a mid band, which is very important. That's the middle of the price action of this box. Remember, every box is different. Every 15 minutes is different. Okay, so this is the mid band of the price action of that 15 minutes. This is the bottom. This is the top. This is an extremely powerful trade. I can't begin to tell you. Back in the late 2000s, I traded this thing religiously with oil, and it was back in those days. I mean, it would come. The biggest trade of them all was this immediate break. It's like the immediate break would hit like 2 or 3 times a week. An immediate break, I'll explain to you what that is. But the immediate break, when it was doing it back in late 2000s, boy, in oil, not only did it break, boy, it would go for $1 plus. I mean, it's $1,000 a contract. But anyways, this I have coded an indicator for this that I'm still tweaking, but I'm going to tell you the rules for it right now, right here. And for those of you, I had a few of you message me. Well, Bob, I saw you said you passed your 5 PAs in 5 days. How did you do that? Right there. While I was creating this indicator, right there. I even took one trade. It was a second attempt. It was a second attempt trade. I took it in the NQ with one contract for $1,200. One contract off this strategy right here. So anyways, what I'm going to do is I'm going to talk about the 4 different trades here, and then later in the video I'm going to show examples on live charts. Okay, so let's talk about the different trades. The first one is called the immediate break. That's the easiest one, but it's also the most difficult. And what I mean by that is you've got to make sure to do this trade. You've got to make sure the box is closed. You've got to make sure that you have hit your 836 clink, and your box is no longer formulating. Okay, you have to make sure of that because you don't want to be jumping in the candle before and then they suck you right in and they take your money. The immediate break is the easiest one and it's the most difficult. So for example, when you're trading it, you got to have say prices. Let's say prices is up in this zone right here. Okay, so prices candles are going up. This bot, well, let's do this because it's the immediate break. We've got to be closer. So price is coming up. As this as this box is closing, and so what you're looking for is in the first 1 or 2 minutes. I mean, the more minutes you are past the close of that box that you attempt to take this trade, the less likely it's going to work. Just telling you that. So what you're looking for is you're looking for that candle to come shooting straight up out of that box in like the first minute or the second minute after the box is closed, or the same thing to the downside. Okay, that's called the immediate break. And I think there was one in gold on Friday. I'll show you examples later. I think there was one in gold on Friday, just right out of the box. I know there was at least one last week in gold for $600. I mean, it just came right out of the box immediately. Boom. 836 box closed. 837 wham, gone. I mean, just gone for like $600. So the first trade is the immediate break. If you don't get the immediate break, you need to. This is where things get hard. You need to sit on your hands. Sit on your hands. Go get another cup of coffee, whatever. Because now that you've gone past that first 2 minutes, you need to avoid what I call is the fake break. The next part is the fake break. This is where a lot of people get beaten up in this strategy. Is price will be like, say, here, and then it'll be here, and then it'll be here, and then it'll be here. And then we like, oh crap, it's coming out of the box. And then price will go here, and then it'll even go here. And you're thinking, oh my God, it's working. And then it goes here, and then it goes here, and then it goes here, and you get stopped out. So, the way I have put the indicator together and the way that I choose to trade this, because again, I'm looking to be conservative. If I don't get the immediate break, okay, I'm not looking for a first attempt. That's why trade 3 is called third attempt, okay, or second attempt. We'll go over that in a second. That's why trade 3 is called second attempt. I'm not looking for that first attempt, because so often they'll stick their head out of the top or the bottom, and then they'll bring it right back in. They know the market makers know what direction they're going to run it. They're just not wanting you to be along for the ride. So they're anticipating. I'm just telling you in my mind, they're anticipating you're going to take that break. They're anticipating you're going to miss this one because it's right after that box closes. Okay, so they'll run it right out of there, or they're anticipating you'll be sitting here nice and comfortable waiting for this one, and then bam, that happens. So here's what you got to do. So between how do I do this without it getting too ugly? Between here and here, it's a no trade zone. Okay, now what is this? This is either a second attempt or a late attempt crossover. It's either this or this. That's what this is. Okay, so I'm going to walk you through all the breaks first, and then I'll talk about the midband last. Okay, so if you get this first minute or two immediate break, go with it. That's it. Boom, go. Let it run. Da 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 da. If you don't get that, and all you're getting, and price is just kind of meandering and then coming to do this, sit on your hands. There's two things you're waiting for. You're waiting for either a second attempt or you're waiting for time and or a crossover. Okay, time and or a crossover. Okay, so these two trades right here are very similar to each other. The second attempt or the crossover late break. So let's talk about the elements of the second attempt. So if you sit on your hands here, okay, after you get past this point here, after you get past here, if you sit on your hands patiently, what you're looking for is not price to just come back inside the box. No, you're not looking for that. I'm going to show you some really good examples, but you're not looking for price to just come back inside the box and meander back on top of the box. I'm telling you that again is just it's just the fake breaks. It's not the momentum. What you're looking for is you're looking for that price to come back down inside this box, down inside this box, down inside this box, down inside this box, and you're looking for a gap. You know how we always talk about look to the left? Now, instead of the gap on a long, this is confusing a little bit. Instead of a gap on the long being from, this is kind of confusing. Instead of the gap on the long being from here to here, remember we talked about rollovers? Okay, rollovers. Instead, the gap is from here to here. You got to have a gap because what you want is that thought process that they drove price down in a rhythmic pattern and squeezed all the stops and had people leaning back to the short side. Okay? This is I'm going to show you examples. You're going to go, holy shit, that's amazing. It is amazing. So you're looking for a gap here. Okay? Now, the way I created the gaps in the indicator is because the box is a different size every time. Okay, you don't know, should it be 5 ticks, 10 ticks, 20 ticks? I mean, because this box could be really big. If it's like unemployment news at 8:30, I mean, this gold box can be freaking huge. Okay, if it's like a no news day like it was today, Monday, what is today, March 4th, the box isn't really that big. As a matter of fact, I'm looking at the box right here. The box isn't that big, but the move that came out of that box was big. I'll show you that later. But anyways, but the box wasn't big. So what I have done is I have used percentages, okay? And so I have settings based off of either gold, NQ, RTY, whatnot, as to the percentage of this space right here, from the top of the box to the midband. I do everything as percentages of the midband of half the box. That half of the box is the part I'm trading. I'm trading that half of the box. I'm trading longs. Okay, so I'm looking for a certain percentage of price to go down, not just price itself, but a gap between in this case the top of the candle and the outer band. Okay, once that is met, then I can do this, aka the second attempt. So price goes bing, 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 and then bing and bing, and you'd be amazed how many times that happens right there. Okay, so that's the second attempt. Again, you got to have a first attempt. Now, by the way, you could have an immediate break that fails, okay, and comes back in and does this also and creates the second attempt, okay? the immediate break or the fake break, either one, if they fail, then you can be looking for the second attempt out the same side. Okay. Yeah. Okay. So that's how this one and this one work. Those two trades. Okay. I got to get moving along, get these other two done. All right. So let's talk about the crossover, and then we'll do the midband. Okay, the crossover. Where did the crossover happen today? I'm trying to think. The crossover happened today, I think. I can't remember. Anyways, the crossover is this. Here's the crossover. The crossover or the late break. Okay, the crossover or the late break. Okay, the crossover is this. So let's do this. Crossover or late break. I call them the same. So anyways, gosh dang it, I thought that was red. So we got price coming down. Let's just say and we get a break here. Okay. So we have what we call what I affectionately call an L1. That's a low first attempt. Okay, I call it an L1. All right, so let's just for conversational purposes, we have this L1 right here. Okay, that's a low first attempt. Okay, now if you followed the rules that I already told you about, you didn't get into this because we're past the immediate break. Okay, right? So you didn't get sucked into this trade. Now, all right, so two things can happen from here. One is price can just, shoot and go back out the other side of the box. I've talked about this before in previous videos that a lot of times they'll run it out of one side of the box and then slam it right out the other. Yeah, that is some of your more volatile instruments like NQ are notorious for things like this. So anyways, so you've got this L1 right here, and then you go back inside the box, and price goes like this. Okay, so we're going to do a crossover. All right, we're going to do a crossover, and that's a crossover. Does anybody see what a crossover is? I mean, it doesn't have to go in a straight line like that, but basically, what you're doing is you're looking for a false break in one direction, and then you're looking for the break out of the other side of the box. Okay, it does not have to go in a straight line like that. Okay, that's a crossover break. Now that one there, I'm kind of still that trade right there. I'm kind of still being hesitant on. There's the second half of this is called late break. Okay, now that is a piece that I'm a little bit more interested in with these trades, and what that is, it's an imaginary time. It's not imaginary. It's a fixed amount of time. Okay, it's a fixed amount of time, but it's a time gap between when the box is closed. So now we're going this way. Okay, from when the box is closed right here to a specific amount of time this way. Okay, that if price hasn't, by the way, if you break through the top, I call that an H1 too. High one attempt, L1, low one attempt. If you haven't created, if you're sitting on your hands, remember we talked about sitting on your hands because you got past your first 2 minutes and you're waiting for that L1 or that H1, right? You're looking for this fake break here or here with price coming back in so you can catch that swing rotation back up. If you're waiting for those two things and you're sitting on your hands, okay, what you need to know is that after, and I've pretty much got it figured out like about 30 minutes. Okay. Um, 30 minutes. So like if this is 8:36, then this is 9:06. Okay. So at 9:06, all right, to be specific, it was 9:05 actually, to be specific, on a trade earlier this week. But so right here at this point in time, when time gets to there, the L1 and or the H1 that have not happened. Let me emphasize the word that have not happened yet. Okay? The ones that have not happened yet are now no longer holding you back. Okay? So what I'm trying to say is now the market makers, the meandering that they've done in here, they've stolen enough money. They've gotten people leaning the wrong way enough. And so at a certain point, and it's right around 30 minutes, if price just stays in this box or even does a little poke out down here, okay, but it doesn't give you a gap and all that kind of. Anyways, my point is that the what I call is an H2, which is your second attempt, your H1 and or your H2. Remember, your second attempt was sitting up here. We had it. I got it sitting here. Here's your second attempt. Here's your potential second attempt. Well, now they become your first attempt, meaning they become your attempt. Those are your trades. So if price, so my point is if the time period has gone by on that specific instrument, i.e. gold, i.e. oil, for example, that would be 9:45. Okay. The NQ, it would be 10:15. If you're past those times, then you can take the trade immediately out of the box. So if price wanders up and goes out of the box, you take that trade. It doesn't matter if it's the first time. Doesn't matter if it didn't blow out of the bottom and it's a crossover. Does not matter. Now you're no longer worried about number of attempts. So go back to this. Let's go back to this. So you've got your immediate breaks, and then you got that timeline right here where you're not looking for any trade unless it's a second attempt after a gap from the pullback and the run through. Okay? If you don't get that, then you're just waiting for time to pass, and then you're looking for the break of the box. Okay? Now, that is this trade in detail, which is the immediate break, the second attempt, and the crossover / late break. Okay? Those are those three. Now, the one that's not been explained yet is the midband. The midband is the last one I want to talk about, and then I'm going to talk about one more thing, which is what kills these trades. All right, so the midband, as you can see, is the middle of the box. And it can become pretty big support and or resistance. It really can. I mean, I'm looking at one right here on the NQ, and it was resistance all the way until 2:45 this afternoon. The box that happened this morning. Okay, so I'll show you some of that craziness here in a minute too. So anyway, so what the midband trade is it's very similar to the 1 minute gold line trade, meaning it needs a gap to the left. Now, again, like let's say we're going to do a long. So if we're going to do a long and price comes up and through the box, okay, right? Now, what you want for a mid-band trade, okay, is you want price to come back to the mid-band with two things. Again, I use percentages because the size of the box varies depending on was there news today, was there not. I don't use ticks to determine this. So there's a percentage of space that needs to be created between the middle of the band and the top, whatever candle, whatever candle passes that gap. That's rule one. Rule two, which is similar to the 1 minute gold line trade, is that like on a long, the candle to the left cannot be the top of the candle to the left has to be higher than or equal to the candle to the right. So like see how this one's here, 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 and this one's here. See that? So they're all in sequential order. If you have one break its way up like that and then down, no, I don't do the mid-band trade anymore. Okay, I'm only trying this thing very conservatively. All right, so what you're looking for a lot of times is you're looking for it to cross over the box, create that space to the left, pull back to the mid-band, like a 1 minute gold line where the top of the candle on the box on the candle to the left is higher or equal to the candle to the right. And then you have your entry one tick above, and then bam. Now, if this is where it gets really kind of cool, if you enter this trade and this is going to be an H2, i.e. second attempt, or it's past the timeline, this becomes a second contract. So this is how you can average into a winning trade. So this goes from here, and this goes to here, and then that goes that way. Okay. So two things I got to get out real quick. One is that what kills the trades, say south, or kills trades north, is if price comes out of the box. So let's just say this. If price comes out of the box, okay, a certain point, which again is based off a percentage of the box, the center box. I'm going to show real examples here in a minute. But if price comes out, then all trades in that direction are now dead. No mid-bands, short, no nothing. So if it doesn't go all the way down and hit target, or if you didn't enter because it was the first attempt or whatever it is, once price gets to a certain point and you have hit that space, then all trades to the short side are dead. They're dead. They're no longer available to be taken. Okay, that's very important. I'll show you examples exactly what I'm talking about. And then and the other thing is there's only one attempt for the mid-band in either direction. That's it. If it doesn't work the first time, I'm not looking for it again. Okay, so anyways, one of the other main things about this that I like is that even the shortest one, gold, has a 6-to-1 on the targets. NQ is running at 10-to-1, so 10 times the loss on stop loss. I mean, these things are amazing, and the fact that you can look at gold, then oil, then NQ, and they're all trading at different times, works great. I'll show you some examples. All right, so the first example I want to give, going back to the lists, is the immediate break. So this was, let's see here, this was gold on February 29th. So when was that? I guess that was last week, I guess. Yeah. So this was an example where, so you got your box that's forming from 820. See, this is the box. You got your box forming at 820 and price actions inside that box. Box keeps expanding as price keeps moving. And then at 8:36, boom, box is closed. Your whole 15 minutes is done. The next, and here's where price closes, right here, right there. Next candle opens, bam, order sitting there, wham, shoot. And in this case here, because this thing is set up for 60 ticks, you from here to there. That's your target. Boom, 60 ticks. Your stop was 10 ticks. Boom, $600 in gold. Now, one of the things I wanted to show you was, see this thing right here? That's my distance calculator that I have set up to stop trades to the long side when price reaches a certain point in the direction of outside that box. This gap right here from here to here is that setting on gold. And it recalculates every time a box is created. So like in today's scenario, let me see if I got today's here. Today's scenario, that gap, see that gap right there is a lot smaller because the box was a lot smaller. Okay, the box was a lot smaller. So anyways, so that's your immediate break trade. Now, one of the things I want to talk about while I'm giving these different examples, this very unusual situation. This is the overnight open. For those of you that remember, the overnight open is a very powerful line that's on these charts. That's on, in my opinion, it's a very powerful line. And you don't want to be trading into it because it has a tendency to, come right back at you. Like getting punched in the face by Mike Tyson. Just come right back at you. You hit Mike, Mike hits you back. So this case, it happened just pure magic. By the time this box got done, the midband was literally on the overnight open, which is just totally crazy. But I bring this up because if this overnight open had been like right here, okay, so that when you came out of this box, you went right into that overnight open. These trades are no longer valid. There is a certain distance that you do not want to be taking trades into those. Now, I each one of these instruments is different between the NQ, the RTY, CL, gold, ES, YM, whatnot. So, for example, the safety space on a GC trade into the overnight open is less ticks than the NQ, because the NQ ticks are like zing 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 zing. I mean, ticks are very hot and heavy in the NQ. So, like, I don't want to take any of these open range break trades if I'm within 20 ticks. That's how I have my settings on this. If I'm from where my entry is to where the overnight open is, I'm not taking the trade if I'm within 20 ticks. Even though this is a 60 tick trade, I'm willing, if it's 20 ticks, to go into the trade and because these things do move in our direction quite often. So I'm willing to go into it, but I'm going to, protect. I'm going to protect myself from losing if it hits that overnight open and comes straight back at us. You know what I mean? But at least if I give myself 20 ticks of room before I get there, I have room to watch it massage itself. So anyways, that's one of the caveats I didn't talk about up here. Is that the overnight open could be in your way. And if it's in your way, you want to be very cautious, because I don't take trades into the overnight open. I talk about that all the time. All right. So this is an immediate break. Okay. Immediate break. Got that? So the next trade I want to talk about is, I'm going to go to the second attempt. All right. So let me find a second attempt example, and I'm going to pull that up, and I'm going to walk through how it recognized the second attempt. All right. Hold on. Okay. So now what I want to talk about is a second attempt. So remember, a first attempt can either be the immediate break that fails because it doesn't go far enough in that direction to then invalidate any more longs that direction out of the box. Okay, so fails. All right, so it fails in that respect. Or an H1, which is, where it's just a regular, after the first minute or two, it goes up, fake breaks, comes back inside the box, creates that space, and then rolls up and goes long. So this is an example right here. So if we go over here and look, we had no immediate, this is candle one, this is candle two, we had no immediate break. This is, by the way, this is oil. What day is this? 28th of February, so just last week. So we had an attempt one right here. See that? That's what that is. That's the top of the box. It came out, came back in. See, it got people leaning. Being aggressive. I got that. Okay. Remember, I'm looking for after all the leaning is over. That's what I'm hoping for. So then we had a pullback, but this gap right here is not sufficient based on the size of this box, percentage of the box, and whatnot, that I'm looking for it to roll up and go back out of the box. So what happened? It rolled up, went out of the box, but we didn't have a trade. We didn't take a trade. Okay. So, and then it massaged itself and then rolled back down, almost went to the midband, and then created the space right here that I'm looking for. And now I'm looking for that break again. So when it rolled up, rolled back down, rolled back up, finally it broke, off it went, and it created that gap that I was talking about. That's what this big red box I've got in here tells me. It tells me that we have created enough of a gap that we're no longer looking for longs after this trade is over. Okay. So that's a second attempt. So I call it an H1 and an H2. And if we go past this line I've got right here, notice it says 946. We go past that line I got there, then again, remember I talked about this. That's when you've got the crossover and or late break. Okay, and I'll show you both those here in a minute. I'll crossover, late break, all in one, really. But anyways, so this is what it looks like, and it kept you. The intent is to keep you out of this garbage right here, where they're just stealing your money. That's what the attempt is, okay? And then to get you in when the market's decided that it's really gonna run. I don't remember how much this one ran. I guess it ran about 30 ticks or so. Anyways, so that's the second attempt. All right. Now, some of those second attempts, like this one, it's profitable, but it didn't do that much. I mean, it went up 30 ticks, but some of those second attempts can be really nice. I think I've got the settings on oil for 60 ticks. Yeah, 60 ticks. Yeah, 60 ticks. So I'm looking for 60 out of the box right now. All right. So the next trade I'm going to put an example up of is either the crossover or the late break. And again, I've got this line being formed here to kind of tell me when I can start anticipating those trades being set up. For example, if this price had stayed inside this box the whole time, which it does sometimes, by the way, okay, and you get past these lines, then you're looking for it either to come out of the bottom of the box or the top of the box, first attempt, okay? That's what that means. That's what late attempt means. Now you get rid of the fake attempts that didn't occur or whatever in earlier time. All right, so let me grab some more examples. All right, let me grab the late crossover, either one. Okay, I found an example, ironically, that has both the midband trade in it and the uh, late break. Okay, it has both the midband and the late break. So let's talk about the midband since I found that example. What it's looking for. Let me tell you what we're looking for. Okay, so you got your midband. This is your box again. This one's gold. So, and this was what day was this? This was March 1st. All right. So again, just recently. I'm just grabbing recent dates. Anyway, so you had the box formed here. Okay, so here's your high, here's your low, and you had a crossover down to the low. Man, one tick from going out of the bottom of the box. Okay, so this was really like one tick from being. This was like one tick from being a crossover break and a late break. It was one tick because if it had popped a tick down below this box and then rolled back up, we would already had our fake break to the south. But anyways, so what happened is we rolled back into the midband, and if you'll notice, we had a lower high, a higher low, a higher low, a higher low, boom, bam, and this one got taken out at break even. But anyways, that's a midband trade. It was straight off the midband. The hope was that it would roll through the bottom of the box. Blah blah blah. I think this one, for conversational purposes, went $160, 16 ticks in your favor, and then it rolled up. So now notice when it rolled up, it had this meandering stuff here. See all that meandering? There's no midband trade there. You're looking for that right there. You're looking for that nice rhythmic, all this. See, it's gap. You had a gap to your left. You're looking for the pivot low or the pivot high that this all starts from where it starts its movement back to that midband. You're looking for that sequential sequence of how the candles print, that you're either equal to or lower than the candle to the left for the high, if you're looking for a long, or higher than or equal to the candle to the left if you're going back to a midband for a short. Okay, so this was classic midband trade right there. Classic, absolutely classic. Now, because it didn't go through here for the attempt one, there wasn't even an attempt two. But you can visualize that if attempt one had failed, we wouldn't have taken it, okay, because it's past the first 2 minutes, all right? And then attempt two, then we would have had the midband, we would have been in here, and then attempt two would have been right here. I mean, one of those is a with two a contract at the midband and a contract here, and you're looking from this point forward, you're looking for 60 ticks. So you're looking at 200 to there, and then you got two at that 60. It's 12. That's a $1,400 trade. Anyways, so what did we get? Well, we got a rollover back out the other side, and that trade out the other side, was a late break. So notice it just went right out of the box. I mean, it just went right out of the box. See, we're past our line here, right out of the box. Okay. So it created our gap box that we're looking for that tells us these trades are over, blah, 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 blah. Okay. So that's your late break trade. And technically it's one tick from a crossover. It literally is one tick from a crossover. And you got a midband right here. So, shoot, I talked about them all. And also notice we had no overnight open in our way. Okay. See, like in this case, the overnight open is down here at 52.8. Our box is 58.9. Okay. So 58.9, 52.8. I mean, that's like 60 ticks right there. So it would have taken, that's why it took the midband short. It would have taken the shorts because, like I said, I'm looking for 20 ticks or more of space from the entry to give me room to manage the trade when it gets to the overnight open. Okay. Let me pull up some RTY charts with the box on there for the whole day, just so you can kind of see how these lines. By the way, I have these box set for 60 minutes. Okay. The time setting for them is to run for 60 minutes. Now, can they run longer than that? Yeah. See, here's your late, by the way, here's your late attempt to the downside. Remember, I told you the longs are dead. Okay. I told you the longs are dead, right? Because the box was created. When it came back inside the box, if you extended the time on this box and actually looked for it, you would have had that trade too. Because that was the late break to the downside. And everybody seeing that? All you gotta do is just change the box. I mean, I'll go in here and do it. I'll change the box here. Let me do it while I'm sitting here. I'll show you what I mean. The box is set for, where is it? 60 minutes. So let's just extend the box for 120. Because 60 is just, you'll see when I pull the NQ up what I'm talking about. So boom, there it is. See, and it created your box there. So there's your trade. And then it created your box. So what I'm going to do now is I'm going to pull up a NQ chart, and I'm going to show you some while the market is in consolidation, which the NQ's been kind of consolidating lately, what it looks like on those bands. While I was looking for that NQ chart with the lines expanded for the day, just to see the reactions off of them, I came across this perfect example of a late break. Okay. So this was the RTY. This was on March 1st. So again, just a couple days ago. This was on March 1st. And again, the RTY has its box, 15 minutes, 9:30, 9:45, the 9:46 candle, boom, 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 boom. This was the 10:16 candle right there that blew out of the box. Exactly after 30 minutes, straight up to our target, which our target on our target on RTY is 100 ticks. The way I have my settings right now is 100 ticks. Our stop is 10 on that specific trade. So, it's a 10 to 1. Ironically, it's like it's how do I say this? When you see certain things like this, it you know draws pictures in your mind that you kind of remember. And one of those pictures is the fact that this break was 100 ticks to there, and then it rolled over almost all the way back. I mean, it's crazy. But one of the things I want to show you also is that a lot of times this box creates the direction for the day. So when you blow out of it, especially the late breaks, when you blow out of it, that's the direction for the day. See that? I think that happened in oil today. I mean, it blew out of the box in oil. And shoot, yeah, it blew out of the box in oil. Where is that? Hold on here. Let me see if I can find that. Let me show that. It blew out. Yeah, here it is. All right, I'm going to show this to you guys. Let me pull this chart up here, right up in here. See, this is oil today. It blew right out of the box. I mean, the system indicated this trade too. It blew right out of the box. And then look what oil did the rest of the day. That's it. And that's the trade right there. Bam, bam. That was today. That was March 4th. Anyways, let me find. I get excited. I gotta. Let me find the NQ where I got the lines expanded for like the whole day, just so you can see. Give me a second. All right, hold on. Oh darn it! I might as well show you. Might as well show you another one. Again, talking about that late break. See, here's our line right here. Here's our line right here. Here's our crossover. Here's our trade. Bam, boom. I think that was oil on Friday. Today's only Monday. I keep forgetting. This was Friday, March 1st. Today's only Monday, March 4th. I keep thinking to myself, well, what happened to the second and the third? There is no second and third. They were the weekend. Anyways, this is what oil did on Friday. Boom, right out of the box, the late break to the upside from the fake breakdown, boom, gone. And I think it was, yeah, 60 ticks. Now, again, 60 ticks. I have the settings on this for 60 ticks. Does it look like maybe the algos have it for 60 ticks too? I mean, does it look like it? I'm not making these numbers up. I have my settings like that. Does it look like the algos have 60 ticks also on the break for oil? You tell me. But anyways, also notice what it did the rest of the day. A late break, and it set the trend for the day. And then, of course, it rolls back at the end of the day, which is way after noon. Anyways, let me keep looking for NQ. Sorry. Jesus, I just interrupted again. Okay, so the point of this chart is not to show any trades or anything. It's just to show, here's NQ. And this was a consolidation day. This was the day where the NQ really wasn't doing anything in any direction, which it's kind of been that way a little bit lately because, I probably because the market's topping out a little bit. But anyways, what I wanted to do is I just said, okay, here's my 15 minutes. Here's my box. Here's my low. Here's my mid. Here's my high. So we break out of the low, come back up to the mid, roll down out of the low, come back up to the mid, roll down, roll up, go to the high. Okay, so this is kind of like action that's going on, in the morning. Okay, right? This is all kind of action we're seeing in the morning. Well, let's look at it as we get into lunchtime. We roll inside the box, up and straight off the top of the box, down through the bottom to the bottom of the box, back up to the midband, down to the bottom of the box. I mean, Anybody seeing that? Then we double bottomed. So you have a W pattern. For those of you that know the W pattern, you got bam, bam, bam. You got your little lower pole than this one, and then this rotated blue all the way back to the top of the box again. Rolled in, rolled up, then down all the way to the bottom of the box. Now, what did it do as it went? Well, it decided to go down and create a midband back down again. Meaning, in the day of consolidation, these lines, if you extend them out, you'll see price action, ironically, throughout the whole freaking day on them. And these are all created in that 15 minutes, meaning they weren't known the night before. Okay. So I just thought I'd show you that observation of mine. I'm not trading those lines. I'm not doing that. What I'm doing is I'm just showing observation of how, when the market is in consolidation, that they'll play these same freaking lines the whole day. Anyways, this here is something that I've been working on diligently to for a couple of reasons. One, I can hone in my trading at specific times, since I'm getting ready to go into the spring season, and I mean I'm busy with my housing business. I seriously have 14 houses to build right now. 14 to build. And I'm sorry, sorry. I have 12 to build. 12, sorry. I said 14. I have 12 to build. Or I'm in the process of building 12, I should say. And waiting for, I got 12 total projects right now going on. Anyways, and we haven't even gotten into the spring yet. So I'm like, okay, I need to get my trading isolated to a specific time. So I wake up in the morning, I can look at gold, see if it sets up, and then I can glance over and look at oil and see if it sets up. And if either one of those hits, I'm just calling it a day. If either one of those hits, I'm just calling it a day. Another thing I just want to add is I made a video recently about an issue I had with some evals that I had passed, and Apex wasn't giving me my PAs. There's a good group of people that watch these videos, and some of you on my behalf contacted the powers to be at Apex and got that situation fixed for me. And I'm very, very, very thankful. Daryl Martin even called me and apologized. I told him, I said, listen, man, you're running a battleship. You can't know what's going on all over the place. I didn't blame him at all. I told him that. I said, I never got mad through the whole process because I knew it was going to get fixed. I knew I was right, but I wasn't going to argue with people. I was just going to get to my ultimate goal. So I do have my 5 PAs now. They're sitting at about $750 across the board, all 5 of them. And I'm just casually taking one contract trade here and there on this for right now. And then if the market starts moving more than it's been doing lately, then I'll expand my trading, and also hopefully my time frees up a little more to expand my trading. But anyways, that's kind of where I'm at, and I want to thank everybody that helped me out with the Apex situation. So everything's been fixed, and I'm back in the saddle again. I'll be looking for a draw, hopefully March 20th. My goal is to get 10 grand out of these 5 accounts on March 20th, whatever that is. All right. I'm going to be posting my trades for the next week off this strategy. I'm going to be doing videos to show you them live in the results. Okay. Everybody have a good day. Talk to you later. Bye.